You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. This is something you will research and make sure that it fits you. So please take notes. Mike Hamilton of Trade the Easy Way is here to talk about ultra trading, trade daily, earn daily, I think is what it should have said. I think I might have messed up that title there. Mike, what do you think? Let me see if I can unmute you. You're self-muted, Mike.
Hi, sorry, yep, I'm here.
Hi, how are you?
Hi, I'm good. How are you doing?
I'm doing well. How is your weather over there?
It's good, yeah. We've got a really nice, warm, dry spell.
Nice.
Really
Well,
good. Looking forward to the
lady that
weekend.
the lady that was on before you is in Spain.
Oh, right.
So we're very, very global today. I'm
Very
going to go ahead
international.
and announce you, and then I'll give you a screen. Do you like to answer questions on the fly, or do you prefer to wait till the end?
On the fly, I'm fine. I'm fine with that.
All right, I'll do that for you then.
Questions on the way, that's fine by me.
So Mike Hamilton of Trade the Easy Way is with us here now, guys. He's been investing since the mid 80s. He ran a business that was in financial communications, working with FTSE small and mid caps. Mike went into full-time trading in 2006. His edge is a rare combination of fundamentals as well as technical trading with a fix on cycles and Elliott wave. Wow. His biggest achievements have been selling 80% of his portfolio before the September 87 US trade figures came out, bailing out of dot-coms in February 2000, and trading gold during the 07-08 crisis. So in other words, I think we have somebody in the house who really works best under pressure. And when things don't look very good, right?
Yeah, you know, the more volatility, the more turmoil, the better, the more opportunities. Definitely, yeah.
Right.
The last thing I want is sideways. Well, last thing we all want is sideways action. Right.
So I'm giving you control there of the screen. If I'm going to change you to be an organizer so that you can see the questions,
okay.
It's going to knock your microphone out for a couple seconds. Probably count to 5 and you'll be back. We can see your screen. It looks like your PowerPoint, though, not your slideshow.
Yeah. I'm just about to change that.
All right, I'm changing you to an organizer so your microphone's going to knock out. Here we go.
Okay.
1, 2, 3, 4, 5.
Right.
You're back. Now you're back.
I'm
All
back.
right. Thank you for joining us. And I will come back on. If you need me, I'm listening. So I can post your links or whatever you need. And then, guys, if you need questions, go ahead and post them. And even if Mike is in the middle of his presentation, we will see them and get to them before he gets away from us. All right, there you go. Take it away.
Thank you very much, Sherry. Welcome, everybody. Right, I am going to go through a simple presentation, not many slides, and then I'm going to go to show you examples of what's going on today in relation to what I'm talking about in terms of my strategy and my system. Okay, so although I'm talking about day trading as well as the previous speaker, you know, we've all got different ways of trading and handling it, and mine is different again. So I'm going to go through that, and you can ask me questions as I go along. But so what I'm interested in momentum markets, and that goes for my investing strategy as well. So volume is the lifeblood of any market. So I don't have lots of indicators on my charts. I'm just looking at volume. I want to know where the footprint is, down to, you know, the initial open, right into your last hour of trading, and of course the bigger picture. So let's get going. So the key thing is with this is that markets are random. This is not an exact science, and this is where a lot of people go wrong, and this is why some people take so long to really become profitable. If you accept that markets are random, then you've got to look back and think about, well, okay, if markets are random, how can I tame that? How can I make them exploit these markets and make profit if they are not very scientific? Now, so I'm going to answer that as we go along. I'm going to basically share with you how I've come on a trading journey, how I've developed this system, why I've developed it, and how you can use it. So we're going to talk about the best markets for trading. We're going to talk about how much you can make, but more importantly, the strategies that are out there. And we've got Fed next week, so I'll talk to you briefly about trading data as well. So Trading Easy Way is a professional team, and the core of our business is simple and clear trading. If you need to have a system, you cannot trade without a system. Discretionary traders will just lose money. If you have a system and you know how to use it, you trust it, you stick to it, you apply it every single day, and you do the right amount of preparation, then you can make money. All right, so I operate a live trading room. So people learn the system, they go on the program, learn the system, come in the trading room, and we trade 4 days a week. And once the trading room is closed, then there is an alert system that kicks in for the mid and end period of the day. All right, so as you heard earlier on from my biog, I am an investor. Day trading is just income for me and fun because I really enjoy trading. Okay, the strategies you can just see on the bottom line there. It's about the open, the first 15 minutes. Gap trading. Gap trading has become brilliant over the last couple of years with a more extreme volatility. And when I go to live trade charts today, you'll see exactly what has happened in the markets. Plenty of opportunities today, as in most days, and then of course I'll talk briefly about data. Right, let's get into this. Disclaimer: protect yourself. Trading carries risk, and if you haven't grasped risk management, which is something that people find dead dull and boring, if I run courses on trade management and risk management, I'll get a fraction of what I'll get if I talk about strategies. So you can see how unimportant people think risk management is, but of course that it's the forefront of everyone's trading. Right, the larger the market, the bigger the volume. All of this can be applied to forex, and it can be applied to day trading Nasdaq stocks, but particularly day trading Nasdaq stocks is a very specialist area, which I'm not going to cover today. I have day traded Nasdaq stocks. It's great fun, but it's personally I find it much harder work. But we'll talk about that later. So as I said, volume is the lifeblood of the market. You won't see a lot of indicators on my charts. You will see predominantly just volume. And I'm going to talk to you about my system. So let's click on and get going so we can get into these live charts. One other key aspect of this is something that a lot of people don't take into account is the fact that we're all different. We all have different levels of concentration. Some of us are more impulsive than others. I've trained and mentored some people who even have a problem pressing the button. So they have the reverse of overtrade and the undertrade. So just have a think about, while I'm talking, just have a think about what trading style suits you. If you want to get in and out, you want to scalp, you want to use a lot of leverage on small moves, that's one way of day trading, and this system allows for that. I tend to just take more time with day trading these days. I don't scalp anywhere near as much as I used to. I like intraday moves, and I find that much more relaxing and more profitable. And I skate across different markets. I don't just sit there looking at the Dow. I do trade the gold and the oil. Intraday, you could be looking at taking a trade and sitting on it for 1 to 4 hours. Intra-week, and then the alert room covers this. If there's a trade that I think is going to sit there for 1, 2, 3 days, then I'll put a separate alert on that and let you know exactly what I'm looking for on the target on that one. All right, you can, as an investor, I personally use the futures market for not just positioning but hedging. If I've got a certain amount of stocks and the markets are going through a difficult time, then hedging a position, you can use day trading to hedge a position, which I find very useful. So the reason why I'm telling you that you need a system is because discretionary traders lose money and you have to trade without emotion. I'm sure most of you, if not all of you, appreciate that, but it's well worth repeating that. You have to trade without emotion. When you get to that point, when you are in the zone, using a system and sitting there taking trades that the system is throwing up, then you can make money, then you can be consistent. So once you've got a system, which I'm going to talk to you about in a matter of moments, you need to understand it, you need to trust it. That will give you the confidence to trade. If you then apply it every single day, expect the same results, then you can limit the time you're at your screens, maximize your profit, and then go and have fun. So it's, I think one of the most important aspects of what I do is the very simple, basic mechanical preparation I do every single day. Yeah, it's a little bit like driving a car. I do a certain amount of preparation, wait till the market's open, get the markets to present themselves, show me what they want to do, and then I'm off. I'll try and show. To be honest, I've had a couple of weeks period where I haven't traded very much. I'm going to show you some screenshots of some older trades, but I'm back fully in the driving seat now and rearing to go, particularly with Fed coming up and core price inflation. Right, so you've got to be mechanical, take out the emotion. The advantage another advantage of having a system like this is it's dead easy to back test. Back testing, I'm sure so many people don't do this, but if you back test, it gets you in the zone. Anybody who has not read Mark Douglas's book, you really need to go away and read that. Once you're in the zone and once you experience that emotionless mechanical trading, then you can really progress, and once you build your account, you can increase your position size. So, right, the nub of what I'm going to talk to you about today is our system, and our system is based on what I call the code of trading. So what is the code of trading? Because when I first heard that term quite a long time ago, I thought that was quite something. Because if you marry up what I've said at the beginning, if markets are random, but there's a code to trade, then you potentially got the key to unlock your profitability. So let me explain that. We all know markets are dominated by algorithms. Nearly, the vast amount of trades that are fired off out there every day of the week are not from you and I clicking buttons, not us little retail traders, but algorithms. These algorithms use Fibonacci support and resistance levels. What else would they use? I'll prove it to you as we get through these, as we get onto the live charts. So what I'm doing is I'm using Fibonacci levels in a different way. I'm combining them into what I call an anchor chart in a very different way. So I've not reinvented trading. I'm not trying to pull the wool over your eyes and tell you I've got some fantastic, amazing system. All I've done is I've taken some basics from trading. I've taken the use of Fibonacci and the way in which you can use Fibonacci, but I use it in a very different way. I've not seen this taught elsewhere. I've developed it since 2005, so it's well and truly refined and specific. So what my strategies do is allows me to measure the break, the open period, to tell which way the market's going to break on any one day. We have specific setups to look for zone pullbacks in good trending markets. And then we have an anchor system that takes me 2 minutes before every day kicks off to set up and line up. I'll give you a little bit of an introduction to how I trade data, but I'm not going to spend much time on data today. And gap trading has been so crucial through the last 3 years. It's always been a key factor in my trading, but even more so today. Right, I'm going to pull out these charts and I'm going to start to talk to you about this. So I decided the best way I can do this is to look at the bigger time frame, look at how I use Fibonacci on the bigger time frame, and then drill down to intraday trading so that you can really get your head around what I do in the markets every day. So this is the Dow. I know this is not quite matched up with the futures market, but bear with me for a moment. It's a certain number of ticks out because it's a UK spread betting platform, but it's not. It's the chart's the same. Anyway, what I've got here is, and let me get the pen. I don't use this. Goes to choose pen card. Got it. Right, here we go. Right, what we've got here is the Dow fib to the previous to 2022 highs and lows. This will start to give you an insight about how I use it. Now, if you look at what we got here, we came into January and burst up into December resistance, but all we did was we fell back into, in March and April, we fell back into a support zone. So you got 50% inner support and resistance, outer support and resistance, and then previous high, previous low, and then extensions. So if this market does break, then these are the kinds of levels I look for if we lose our footing on 2022 lows. And of course, the opposite's true. If we start closing above this key resistance zone, then I'll look for 22 highs. And if we bust up there and hold 22 highs, then I'll look for the extensions. That's the essence of what I do. That's the very, very basics of Fibonacci. But like I said, I'm applying it in a slightly different way, and you'll hopefully see what I mean as we get into this. So this recent low down here was 50% of the 22 range. That we dipped underneath it, which is quite normal, held it, and now we've just broken above this resistance zone. So it looks as if we're going to go and see December highs up there at, I think that's 35.5. I'll go and check in a minute. Okay, let me just, right, I'm getting used to this pen, that's good. Okay, so if that's the daily chart, here is the intra-week. So if I just take off end of, I'll leave that. All right, so this is what happened last week. Bear with me, I might just take a sip of drink. Okay, so this is the last week. You see the very nice chart pattern coming down here. So if I apply the fib range to last week's range, what does that tell me? What is that suggesting? The sequence that you're seeing here is, let me get the pen again. Don't find these pens very easy, right? This market was we had this huge steep climb Friday last week. So we spent we did a 3-wave correction into Tuesday, And then we started off on this wave pattern to the upside. And you can see what we've effectively done in the last couple of hours is broken through last week's high. So the market was so bullish, we couldn't come and find that support zone down there at 377. But on the Tuesday, we closed on this support level here, went to the previous day's high, pulled back, and then ran. This purple line here is incredibly useful. Why? Because whichever way you trade on that Friday close, and this is the very end of the week close, not the cash close, if you trade the right side of that at any one point in the week, ideally most of the week, then you know which way the market is sitting. Let me drill down again. If you look at the 15-minute chart, right, now you're seeing that blue line is the cash close yesterday. So you've got the open bar here. This is the open bar of the day. So into the second 15-minute period on this 15-minute chart on the cash open, look at that. It is pinpoint to the gap. So you can see why gaps are so important. And look at what happened prior to the cash open. This purple line here on this 15-minute chart held, well, we breached it, immediately closed higher, very bullish. We held that Friday close the whole of the main part of the London period and the entire pre-US Open and post-US Open. And then once we had that significant move at the Open, the first 15 minutes, then they went right back to the gap and then they ran it. So from that gap, you have to the highs, it's probably about 150 pips, 120, 150 pips, I think. So you can see why I love the gaps and why the gap is such a good way to trade. Another strategy, which I will try and go to if I've got enough time, is gap and go. So if you have got a situation where the cash market closed down here, the next day at the cash open, you open up there, you've got a gap, a significant gap. If that gap is more than 100 pips, then there is a specific level that you can look for a pullback. It's normally about the ideally 61%. Take a 61% drop back into that range, and then you can buy it. If you subsequently hold that that high, then you know you've got a potential move out. If you've got a potential move out, our system shows you exactly where to trade it to. I'll try and show you that in a minute. So what else? If you look at, let's look at a different market and apply the same theory to a different market. If you look at, I'm going to go across to the oil. Right, this is oil on the 15-minute chart. One of the reasons why I like oil so much is because every Wednesday or Thursday, if it's a short week, the market leaves a big footprint on the invents. So 3:30 UK time, which is 10:30 Eastern time, you get the invent. So what I do is I like to color code that move. So here we are with the invent bar last week. I'll tell you why this is so important. If you have, now you can see we've had this decent drop. we moved right into, yesterday we moved into the post-invent resistance, fell outside of the invents. Now I actually got to stop out on this, and I'll explain why I was on the wrong side of this in a minute. And I'll show some of my winning trades also. But if you've got a market, if this oil holds that invent range, I buy and then sit in it. So had we have yesterday come back in that range, held it and held the invent high, I would have gone to an extension range up there around about the 75 mark. I was looking for 75 on the oil. We looked as if we were going to hold the pre-open support. I bought it, got stopped out. We were holding the Friday close, but this just fell apart, and we're still struggling with the Friday range even now. But that's one reason why the oil is so good, because you've just got, this is a massive marker for the whole of this week. And if we eventually into next week, if we pick up off this support and eventually next week hold this 72.5 and 73, then I will trade that up to the 75 plus. Why? Let's go to the bigger time frame on this one as well, and I'll show you how the sequence in this system works on the bigger time frame and how I drill up and down on this. I did it on the Dow, so let's just do it on the oil. You look at the oil on the daily chart. Again, fib to the 2022 range. I just think that the sequence that you can get out of this is just really eases your trading, or it should do. Dramatically influences my planning. So you can see what we're doing here is we are grappling with the 22 lows at 70.20. So you can imagine what I'm going to say. If we hold this 70.20 and start closing above this triangle here, then you need to buy this and sit tight, because we're going to see 85 and potentially go back to 50% of last year's range at 100. If we close underneath this 70.20 and of course 70, then look for 55, and if we really get sunk, look for 34, 35, 34. Okay, so this is why I was buying the oil yesterday, because had we have held that in during yesterday and broke that high yesterday, that would give me a nice run to 75 and possibly more. So whatever happens around this 2022 low is going to be crucial to how I trade oil for the foreseeable future, certainly into this year. Right, so let's go back to the Dow and look at the, wow, that's actually taking a bit of a hit at the moment. Let's now look at the 5-minute Dow. Okay, all we're doing is we boomerang, we're coming right back to the gap now. So let's have a look. So there's the gap. So Friday close was down there at the 8:30 New York lows. We came into the market. The first 5-minute bar was here. Best thing to do is to range that. Color code it. Let's put a color band around it. And you can see all we're doing at the moment, I still think this is viable at the moment. We've not got evidence that's going to hold, so I certainly wouldn't start diving in at this stage. So what we've done is we have broken, we've pulled back, and then we've done a runner. And at the moment we are, if this market fades down here and holds, I think this is extremely bullish. So although there's a lot of red on that 5-minute chart at the moment, if we start holding this range and that gap, this could go a lot higher. Fridays tend to be lower probability days. I think a lot of people have jumped ship and taken profits up there. Anyway, right, let's go back to just remind myself. Right. Let's look at markets that have got bigger gaps. Let's have a look at gold. So how could you trade gold today? There's the yesterday's gap. Blue dotted line is the cash close, the close end of yesterday. At the moment, this is a good example of when not to trade a market. If you've got a situation where you are going either side of the gap and the open range, then that is a clear, well, to me, it's a clear evidence that you should be staying away. So this is the, let's go for the 9 o'clock Eastern time range. Let me just find that. Right, here we are. That's when the main volume comes into the market in something like gold and oil, 9 o'clock Eastern. Let's range that. So you can see ever since London and pre-open, all we're doing is diving either side of the range. So steer well clear. This is normally what I'd expect. I tell you what, the Dow often looks like that on a Fed day. That's why on a Fed day, I don't like to trade the Dow. I trade the reaction to the Fed news, not the news itself. Okay, let's look at the daily chart on this one as well. This is Fib to 2022, as you expect. Notice how we've got this huge trend line under gold. It's in a massive channel ever since October last year. So if we, at the moment, we're holding this channel. If we continue to hold that into next week, and of course after Wednesday, then I think we're going to pop up to 2075, and then I would expect this to go to, I'm bullish gold. I think this is going to 2358. For that to happen, we have to close above and hold 2075. Given that we're at the bottom of a massive channel there, I think that is highly likely. Obviously, come out, start closing on these 90.40, and then we're going to peel back into gold. If gold really loses its footing, we could find ourselves down here at 1490 and 1330. Right, let's look at another thing. I'm a massive fan of commodities because I started day trading commodities. One of the things I started day trading was grains, believe it or not. Right, the reason why I'm so bullish for grains is because we are sitting back here in March 21 lows. If at any stage soon we get above 725, I'm in this anyway. I traded it up here at 695, 680, 695. Got stopped on this breakdown here. I'm now getting back into it. I'd love to see $6 again, because if we look at the volume coming in down here, so we're currently above the 20-day average. If we subsequently hold here, close above $7, I've been predicting all of this year so far, despite having been stopped out, I've been predicting we're going to $15 in wheat. I still stand by that, but I will cancel that prediction, obviously, if we start breaking these lows and stay lower. Commodities are a much, much thinner market overall, including oil and silver. So that's why you tend to get them breaking key levels of support. If they break key levels of support and break back up, boy, is that bullish. So just keep a close eye on these commodities, because we're in a commodity super cycle in my book. As my biog said at the beginning, I love cycles. I'm a massive fan of cycles. I apply this type of Fibonacci and Elliott wave to everything I do, and I wouldn't trade any other way. Right, let's go back to let's look at what the Dow is doing. Right, let's move on. So you can see how important this area is on the Dow. We're nudging back into this drop zone from May, in this just coming up to the middle of June, and of course we've got triple witching coming up as well. So this is a particularly volatile time of the year. Triple witching is going to be crucial. Let's see what happens on that one. Right, what I want to talk to you about now is let's go over to the program. So what is involved in the program is it's a 4-hour program that talks about the open trading range, talks about gaps, including gap and go and gap fades. It talks about oil events. I can't write with this. And it talks about data trading. Couple of rules, couple of things to add into this. I never chase the markets. If a market busts up, and this goes for anything, stocks, commodities, day trading indices, anything. If a market busts up and a lot of trades are missed out, guess what? It normally boomerangs back to where it broke out from. And you can scale that up and down into intraday and bigger time frames. So for example, if you've got non-farm payroll on the Dow and it absolutely screams higher, normally you'll either get a drop under the 50% into the 61%, or in some cases you'll get a full 100% drop. So that's how I trade data. It's direction, pullback, move, and of course it's true of the other extreme. Severe drop down. Don't chase the market. Don't engage the market before the data's out. Otherwise, you're going to get your head taken off, bitten off, and given back to you. Wait for the direction, trade the pullback, and then your targets will be extensions. And like I said, if we end up with a very, very violent move, and just sit there and watch it, don't even think about engaging it. Okay, so there's the strategies: open breakout, big reloads, which is the boomerang I've just talked about, intraday reversals. Now, I'm not talking about intraday reversals. So the system, we had this on, I think it was Tuesday. On the Dow opened at an extension. So I bought the extension, and then that wound its way up. Oil did exactly the same. Oil and Dow were very, very well matched that day. So that was a great day. So we talk about now entries and targets. The main thing about this system is, so I started off by saying you've got to trade my system. What I'm talking to you about is I'm breaking down my system here, giving away a little bit more than I normally do. One of the most critical things about the system is it gives you very, very specific targets. So many people get into trades, and they're only then, after a trade, think about what they actually want out of the trade. If I'm going to engage this market, I know pretty much what I'm looking for before the market opens, and I know what I want from that if that trade works. If I take that trade, if the trade's confirmed, then I will, and you'll see that in my if the trading room is closed after the first hour and we've gone to the alert room, then I'll update everybody in the alert room as to what I'm looking for, and I'll show you some examples in a minute. So if you come on the program, you get all of this. You get the golden anchor system, the chart setups. Then you go into the live trading room, Once the live trading room is closed, then the chat room's open. You get recordings and then you get alerts. Right, I want to talk to you. Let's show you some trades now. Let's show you some live trades I've done in the recent past. Call up my images. What have I done with them? Over here. No, I lost them. Right, let me go and find them again. Sorry about this. I had charts ready to show you, and somehow they got closed. No, right. I think it's here. No. Ah, got it, got it. Right, so this is one of my futures accounts, and on this particular day, 100% win rate, 5 trades, $1,295, no stop outs on that particular day. The 5 trades for me in a day is a little bit high. I would normally do 2 or 3 most days. Must have been a particularly active day. And I would normally do that across, I've traded a lot of gold recently because gold's been so volatile, but Dow is my mainstay market, and then I love oil in and around the invent range, and then I like gold if gold is really coming to play and it's very volatile. So other trades, these, I don't find these pens very good, never mind. So that's an example of chat room. Well, you just use the Telegram app, nothing flash. So on this particular day, I bought oil at 982, 100 pips in oil, 30 pips in S&Ps, taking profits an hour and 10 after the open. Let's show you some actual trade setups. Very difficult checking on time and doing everything as well. So that's nearly £1,000 sterling on a Dow, on a FTSE short. Let me enlarge this. That's a daily chart. Daily charts are crucial for me. I'm not actually, I'm trade, a lot of my trades are actually taken off a 2-minute chart. I've got a very specific way of using a 2-minute chart. I use a 2-minute chart just to refine my entry. That's all I use it for. I don't sit there staring at a 2-minute chart. I sit there monitoring my anchor chart system and monitoring the bigger time frame. So this is 500 sterling as this gold trade moves off. It's an S&P chart trade, 500 quid nearly on a Dow move there. I've not got any more trades. Okay, so where am I? I've still got 10 minutes plus to do. Right.
Mike, you're good until the top of the hour, so you got about 20 more minutes.
Okay, good.
Good deal.
Thanks. Yeah, so let's have a get an update on this 5-minute Dow. Yeah, so there you go. Quite a severe drop on the Dow. I think this we've now got a close on the gap, and this I would call this a fade. A bit of jargon here. I call this a fade. So anybody who's interested in trading this Dow, if this comes back and sits on that open range high again, I think we could potentially go back to the highs on that. Let's look at the 15-minute chart. Yeah. So if we were to close higher here on this gap on this 15-minute chart, then I think we could potentially go back to the highs and beyond. Like I said, we're in doldrums now, so the main move was into that high, very, very close to 34k. It's lower once you come out of the main hour, and once you come out of the first 90 minutes, it is a lower probability, but nonetheless, you know, if the setup stacks up, then I would take it. Okay, so that's happening on the Dow. Let me show you some other examples. Let's go back to the slides for a second. I want to show you what, a couple of pages here. This is a 15-minute chart of the DAX. It's actually quite an old slide actually, but I'll show it to you anyway because it's really valuable. This market has gapped up at the weekend on this particular week, and this is a 15-minute chart. So this is plotting 1, 2, 3, 4. So this is plotting 3.5, 4 days of trading on the DAX on this particular week. So this is, so if you stay the right side of the gap, or come back and obviously fill the gap is more important. If you come back and fill the gap and hold the previous week's support, which we did down here, that is a really good place to get in and buy and pick up on that big sweep. That happened on the London period of the Monday of that week. So we gapped up over the weekend, backfilled, held, closed above the gap, and then broke the overnight highs. And then we did a repeat. We just kept doing that. We fell right back into that same level, looked as if we're going to do it again, but then once you start closing back inside the range, then that is a red flag. You need, for that to have gone back to the highs, you need to go close above the gap, hold it, and then push higher. So then we ended up, once we broke down here, the high of that gap range became resistance. So then we went back deeper into the previous week's support. Looked good up here, but immediately closed lower again. So this is a really, really choppy week. I wouldn't mind betting this was a summer period. This is typical of a summer period where it's just floating around. But like I said, if you spent the whole of the week sitting above that gap, then you just need to buy that, and then ultimately, if we closed above the highs, we've gone up there, held the highs, bought the pullback, then that could have run much further, and I would have taken, my target would have been that range. I can't do it on this, but whatever that is, that must be 200 pips. I would have looked for a move from there for 200 pips had we have held that high, but we ended up just flailing around. Okay, let's look at another example. Let's have a deeper look at the oil events this week. Right, let's come out of that. Yeah, so this 15-minute chart here has held the open range. There's the open range on the 15-minute chart. So if we can close back above this open range, then that could run. Right, let's look at oil. Let's drill down to a 10-minute bar. So events yesterday did this. Sorry, events this week. Let's go and find Wednesday. All right, so on a 10-minute chart, I'm looking at a 10-minute chart because it just gets me away from the way I've marked that one up. is the period was here. So there are still some reasonable pips to make here. If you're using futures, this is a decent number of pips, decent little profit there on a smaller move. It comes back to what I said in one of the earlier slides. If you like to be in and out of this market much faster, then obviously use a smaller time frame. What's it going to do? Yeah, so there's a nice little move here. 30 minutes after invents, that holds this pre-invent range and then makes a move. So the support down there was 72.38. Yeah, you almost get close to 100 pips out of that if you'd bought that low and that support. But then you get a warning signal 2 hours after the events. Hang on 1 second. You get a warning signal there a couple of hours off, which is doldrums anyway. Falls back. Now this would have been interesting to me. I didn't trade oil this day. In fact, I didn't trade this day. What you get is where's the close? Right. It does come back to the floor of the invent range. Sorry, the floor of the invent range. There at 72.60 and does a move into 72.95. That's not a great number of pips, is it? Really, certainly not for me. But look at the volume. One of the key aspects of this is why I don't think you need, I don't think you need hardly any indicators. I enlarge that volume. What's happened is that's gone up on lower volume. So if volume's the lifeblood of the market, and you're sitting there keeping a close eye on the volume, that alone, that volume decline in the volume as you move higher, is symbolic of a market that is unlikely to hold. So get out. If you look at that in a bigger time frame on the 1 hour chart, you'll note that we had, look at the volume into the early part of this week. Huge volume here on that spike higher. Surprise, surprise. Look at the volumes in the early part of this week, even before events came out, were pathetic. This is a 1 hour chart. So we were coming up on much lower volume here in Wednesday. So the chances of that sustaining itself up there is very limited. And today we've got even lower volumes than yesterday. That push up there more likely to be short covering, because the move up here today into that Friday close is much lower. So this is and of course, those of you who are paying attention, you'll note that we couldn't get above the Friday close. That purple bar is the Friday close. So you've got a lot of signals there telling you that the likelihood of oil pushing up as we speak at the moment, with a good couple of hours, 2+ hours to go till the main market closes, the futures market closes, we are pulling back into support, but overall we've got very low volume and we have not got enough commitment of traders to take that through that 72 resistance. So one of the most important things to me is the sequence of a chart, intra-week chart like this. So unless we actually gapped up here, so one of the reasons why I'm so bullish is because we had such a hefty gap up. But having spent so long underneath that Friday close and the volume's not confirming, then that may be back off. Right, let's have a look at the Dow on the 6-minute chart. Yeah, you see, significant down move. So we got what have we got? We've got 180 pip drop from the today's cash highs to this pullback, and yet I still think that is potentially very viable at the moment. So that's the advantage of the Dow. You get such a decent pip range on the Dow that you just the S&Ps is a like a lamb compared to the tiger of the Dow. So you've got many more pips available in the Dow, and so on average, a good day on the Dow, you should be getting, again, depends on whether you're a scalper or an intraday trader. A scalper should get 50 to 100 pips pretty easily. The intraday trader should be looking at 75 to 150 plus pips a day on the Dow. So if you're an intraday trader, particularly got a smaller account, do not expose your account. Do not use excessive leverage. You've got to use very specific leverage and manage your account. Okay, so let's have a look at let's have a look at the weekly chart on this. I'll show you how I mapped out my weekly chart. And now the weekly chart, in line with my love of fibs and Elliott wave, this chart is fib to the last major move with trend lines. You can see we're sitting in that. In fact, if I delete that triangle, just leave us with chart patterns, you will note that we're sitting underneath this huge area of this huge trend line coming up. Volume is keeping up, so I'm still optimistic for the Dow based on volume alone. That's a 20-day average which we are holding. Any market that holds a 20-day average in any time frame is buyable, and vice versa. Any market that doesn't is shortable. We're pretty flat for the week. We look at the moment, we're only marginally higher on the week on this weekly, with not a lot to go before the close. So obviously a lot of hesitation ahead of Fed and inflation next week. So this is the thing you need to watch for in this particular market. So we've got 1, 2, 3. This is called 3 and through. We've got 1, 2, 3, 4. Okay, normally I would say 3 and through. If you can't get through after 3 moves into the 4th move, then potentially be very bearish. So if we get a lower high here and it's unable to penetrate this high, having already made 4 touches of this trend line, then this could give way big time. We get a lower high and close underneath this 20-day average, then this is potentially going to fall off. So it's all up to the Fed. But if we break up here, then buy a pullback into that trend line, and then see if we can go back to the top of this bigger time frame channel I got marked up there. So even if you're a day trader, you need to be acutely aware of what these markets are doing, plot them out, go into the markets fully prepared. If you haven't got a system, then don't trade. If you would like to join the next program, which is a week on Saturday, which is the 9th. So the next program is on the 17th. Now, the last frame of the slides, and then I'll finish up. Let's go back to this. So the benefit of being in the trading room is that we work together to the same system. That's why I don't give free trials, because I don't want anybody in the room that's not working to the system, or because all they're going to do is ask a whole heap of questions. So if you go through the program, you come into the live trading room. We do the same preparation every day. We look for the same entries and look for the same exit strategies. So we expect the same thing every day. If for any reason that system does not work on any one day, we stop trading. And like I said, it's Fed days are very low probability anyway, so just back off from Fed day and then see what we get. So to join the trading room, you need to complete the program. You get the check sheets, you get the template trading plan. We do a lot of simulated trading, because if you're confident with the system, you understand it and you use it, then you can maximize it and really exploit it. You can use it for forex, no reason why you can't if you prefer forex. It works perfectly well on forex as it does on oil and gold. If you want to join me, then it's $747 for the program, all of those tools, and 8 weeks in the trading room. The trading room runs 4 days a week, Tuesday to Friday, for normally about 45 to 60 minutes a day, and then you get the alert kicking in once the trading room closes. All right, so I'm going to get Sherry to come back.
I'm right here. And I'm wondering, do we have any questions for Mike? Because he's got like 2 minutes. Somebody asked, what is the name of Mark's book?
Mark Douglas, Trading in the Zone.
Mark Douglas?
Yes, Mark Douglas, Trading
Okay.
in the Zone. Fantastic book. It was written quite a long time ago, but still very, very applicable to today's markets.
Sweet. Did you get that, Lawrence? All right. And anybody else? Now listen, do I have a link that you would like me to post for your offer?
Yes. Let me just come out and get
And
that.
I may have.
I should have given that to you before, shouldn't I? There we go. Hang on.
Yeah. If you post it in the chat to everyone, you'll be able to get it right there.
So I'm going to post 2 links, one to the program and one to the offer. Actually, yeah, there you go.
Okay, here, I'll copy that. And let's just go here. No, it didn't copy it. Phooey, come on. There we go. Now I can send it to everybody.
Okay.
There we go. Trade the Easy Way, your course, the Scalper School, and then your brilliant offer. Yes, sir. It was a brilliant offer too. So that is fantastic. I believe we are right on time. That's pretty awesome.
Bang on the hour, yeah. Just gone.
I really appreciate you coming in. I know that there's a lot going on in your side of the world there and in your life. So I really very, very much appreciate you taking the time to come and be with us. I hope you'll do it again in the future.
Yeah, I'd love to come back. It's good fun. And
all right, awesome. Well, you have a wonderful day, rest of your day. It's probably getting on to evening there now, but I hope it's good.
It's just tea time, actually.
Okay, here's to tea. You have a great evening then.
Thanks, guys.
There we go. Mike Hamilton of Trade the Easy Way was just with us. Ultra trading, trade daily, earn daily.